Okay, so for today, we are going to answer problems in financial ratios. So I'm only going to pick up six short problems here, and then one comprehensive but short questions, and we have also one comprehensive question with so many requirements. So for the first part would be for the short problems. Okay, so we have here the chosen items. So the first one is for Tulips Company. So the given is the day sales outstanding of 40 days with annual sales of 7.3 million. Then the accounts receivable balance is asked, assuming a 365-day year. So the average accounts receivable balance or the accounts receivable balance can be computed if we already have in mind the appropriate formula that can solve for this problem. So since the given is on the day sales outstanding, so we are given a clue to what formula can be used. So kay day sales outstanding man, so we will use the formula for the days sales outstanding. So what is the formula for the day sales outstanding? So that is average AR divided by net sales divided by the number of days. Okay. So the day sales outstanding here is 40 days. So therefore, in our formula, so we can convert this one as 40 equals your average AR or simply your AR because there's no given here as to the beginning and ending balance. So we cannot assume man. So therefore, this is our AR. And then since the sales is given, so we can substitute that 7.3 million and then divide by the number of days in a year. So the number of days in a year is 365. So compute, so 40 equals AR over what is 7,300,000 divided by 365 days. So that is, how much man na siya? That is, have you tried to solve this one? Okay, so that is 20,000. So multiply, so cross multiply, so that's 40 times 20,000. 40 times 20,000, that would be 800,000. So therefore, you have your AR is equivalent to 800,000. Okay, so that would be the answer for number 1. Any questions before we proceed? Any questions with the first item? Okay. Second question, a firm has sales of 1.2 million and 10% of the sales are for cash. The year-end accounts receivable balance is 180,000. The number of days given is 360 days per year. So since the question is average collection period, so you need to use the average collection period formula and check if the components of that formula is provided for in the problem. So what is the average collection period? The formula for average collection period is average AR over net sales over the number of days. So again, the formula that we're going to use for the problem depends on what is available on the given. So if, for example, given ang RTO, so we can shortcut the process. But if the available nga mga data can fill in the components of a certain formula, then you can use that formula. So for this one, given monthly net sales, given monthly days, and then given monthly AR. So then we can use this formula. Okay, so next, so let's compute. So average collection period, or this is your day sales outstanding. So average collection period equals average AR. So this is, although the beginning balance is not given, so usually we're going to average this one. So we can use the ending balance. That's 180,000 divided by our net sales. And then take note that out of the 1,200,000, 10% is for cash. So therefore, we need to get the remainder because that is our net sales. If you are taking note of what I have mentioned in our previous discussion, that the focus for this uh, AR formulas like turnovers, AR turnovers, collection period is on the credit sales. Okay, so since in the given, you can compute for the credit sales, then you need to separate the cash sales from the credit sales. So therefore, how much is our credit sales? So the credit sales here would be 1,200,000 times 90%. So therefore, the credit sales is 1,080,000. Okay, 1,080,000, then divided by the number of days in a year. So actually, this one would be the turnover na to. Diba? The formula for the turnover is you have your credit sales. So we can compute, you can use also the other formula if you don't want to divide. Pwedeng AR times number of days in a year divided by credit sales. So, pwede siyang ganaon para dili siya puro divide and then divide na po. But for this one, you can start with the denominator first. So, compute this one. So, how much is the daily sales? That's 1,080,000 divided by 360 daily sales in terms of credit sales. So daily, that would be 1,080,000 divided by 360. So that would be 3,000 a day. So you have 180,000 divided by 3,000. So the average collection period is 60 days. Okay. So if we're going to compute for the uh, collection period, so how do we use this one to make an analysis? So based on the given, out of the 1,200,000 sales, 90% is for credit. So that is the amount that we're going to be collecting from our customers. So how many days will it take us to collect the accounts receivable? So that is being answered by the average collection period. So how many days? That would be 60 days. So what does this mean? In the entire 360 days or in the entire year, uh, it will take you how many days for you to collect your receivables. So that's 60. So if you're going to compute how many times a year can you successfully collect completely, so that would be 6 times a year. So therefore, 6 times ta makakollect og cash. And 6 times pod, mabalik ang money, pwedeng mabalik ang money into operations or can be used for other purposes. So that is why we need to make sure that we can speed up our collection so that our average collection period would be shorter. So, mas paspas. Because pag mas paspas ang collection, mas dali nato siya mabalik ang kwarta sa ato ang business. So, mas magamit or ma-maximize nato ang ato ang cash. Okay, any questions before we proceed? Okay. Next question number 3. Charlie has accounts receivable turnover equal to 12 times. If the accounts receivable are equal to 90,000, what is the value of the average daily credit sales? Okay, how much is the average daily credit sales? What would be the answer? Okay, what is given here in the problem? RTO is given, the AR is given, but you are not given the credit sales, diba? So how much would be our credit sales? So that's the first thing that we need to compute. Okay? So not given man how many days in a year, so you can use here 365 days or 360 days depending on what will meet the final answers in the choices, because usually multiple choice man ni siya. So depende kung unsa may mogawa sa choices ani. So you can use 360 or 365. But the first thing that you're going to do is you need to get, of course, how much is the credit sales. So that's correct. You're going to use the RTO formula. So the RTO, the AR turnover, so that's equivalent to, what's the formula? That is credit sales divided by your average AR. And since the RTO is given, so that's 12 equals, the credit sales is the item that we need to compute here. So credit sales over average AR, so that's 90,000. No need to divide it by 2. So cross multiply, okay? So therefore, your credit sales is equal to 12,000 times 90,000. Okay, so that would be 1,080,000. This is already the final answer. So this is only the total credit sales for the entire year. But how much should be the daily credit sales? So we are going to divide this by the number of days in a year depending on the problem, since wala man siya specification as to the number of days. So we can use either 365 or 360. So what is our daily credit sales? So if we're using 360 days, okay, so therefore that's 1,080,000 divided by 360. So 1,080,000 divided by 360. So that is 3,000 a day. Okay. So 3,000 per day. Okay. Or pwede na 3,000 because this is already, the question is already how much is the daily credit sales. If we're going to use 365 days, so therefore that would be 1,080,000 divided by 365. That's 2,950 8.90. Okay, 2,958.90 per day. Okay, so your answers are correct. Next question number 4. Yes. Um, Again, it depends on the. You can answer both if it's not given. Well, there's no really standard that you're going to use a certain number of days, because actually in some problems they even use 350 depending on the number of business days within the year. So they use 365 if that's completely 1 year. Others also use 360. But if the problem is multiple choice, you can identify man which one is being used if unsay mo tunong sa problem or sa problem sa choices di ay unsay mo tunong sa choices, because it's unusual nga they provide the two answers using both 365 and 360. So it's either one of them gid ang gamiton na niya. Di ba lang sila mohatag sa choices nga na mo gawas at 365 niya na apoy mo gawas 360. But if it's open-ended question, so you can use either 360 or 365 if the problem is not or if the problem is silent or it does not provide. But if you're using, usually if based on my observation ng pod, if it's a foreign book, they usually use 365 in the computation. If that's a foreign book, but it's not the general gid nga rule. Okay? They use 360 because that is the approximate number of days. If you can recall your lesson in business math, di ba, naman ito yung mga actual, approximate. So, they use 360 based on the assumption that every month has 30 days on the average. So, 30 days times 12 months, that would be 360. Okay? Usually, they consider a month as na composed of 30 days. Mo na siya nga na mo gamit og 360. Question number 4. The following pertains to Batalya Company. The inventory turnover is. Okay, how do we compute the inventory turnover? What is the formula? So the formula for inventory turnover is cost of sales over average inventory. Okay. So how much would be your inventory turnover? Okay, so there are answers here. Okay. 1. Okay, 1.812, 2 times. Not sure. How about the others? What are your answers? Okay. How do you get the average inventory? Actually, can you compute the average inventory here? Can you compute the average inventory? Is there a way to compute? Because in accounting or in problems like this, if there's a way, there there was a will, there's a way. Okay, if there's a way to extract the amount, therefore you are going to use the amount nga ma-extract. Okay, so how do we get the average inventory? So it although wala man siya beginning ma'am inventory. So dili na ako siya average 16 lang akong gamiton. Mm, wala pa siya other way. Remember, how do you compute the cost of goods sold? How do you compute the cost of goods sold? Can you How do you compute the cost of goods sold? What is the formula? Anyone? So beginning plus purchases minus ending balance. So this is the very simple computation if there are no returns, there are no fit in, yan na. So therefore, you have your 80,000 nga cost of goods sold. This is given, di ba? How about purchases? Given. How about inventory ending? Is it given? Yes, 16. How about the beginning? Is it given? No. But can you compute? Can you compute the beginning? Yes or no? Okay, so therefore, how much is the beginning balance? So if you're going to work back, so do the opposite balance, 80 plus 16 minus 72. How much is our beginning balance? You can answer orally lang. How much is the beginning balance? Okay, that's
Correct, that's 24,000. So now, can you compute the average inventory? Yes or no? Can you compute now the average? Okay, we can now compute. So how much? So 24 plus ending of 16, then divided by 2. So how much? 220,000. That's correct. So therefore, can we now solve for the ITO? So that's cost of sales, 80,000 divided by average is 20. So therefore, the answer is 4. So somebody actually got it correct earlier. So I think that was Sidori, if I'm not mistaken. Okay, so that's actually 4. Okay? So if there's a way on how to extract a certain amount and it's obvious in the given, kay ano man siya, explicit man siya nga ma-identify in the given, then you will compute for that amount. And the computed amount will be used in the formula. Okay? Next, question number 5. Okay. What is the level of inventories? Okay, so we'll use this space here kay na ano na siya, na short na tag space. Okay. A and B Industries has current assets equal to 5 million. The current ratio is 1.2, or therefore if you read this one according to ratio, that is 1.2 is to 1. Therefore, your current assets is 1.2 and your current liabilities is represented by 1. The quick ratio is 1, so therefore that's 1 is to 1. Same quick assets level with your current liabilities. So what's the firm's level of current liabilities and what is the inventory? Okay, do you have answers before we proceed? Okay, we have. Okay, so according to the ratio, okay, you have some answers here. The current ratio is current assets over current liabilities. Then you have, okay, that's correct. So we will use the formula here for the current ratio. Okay, so the current ratio, remember, that's current assets over current liabilities. So if the current ratio is 1.2, so therefore that's 1.2 is to 1. Okay, so 1.2 is to 1. And then our current assets here, okay, our current assets here is 5 million. So therefore that is 5. And then question mark is our current liabilities. So cross multiply. So therefore our current liabilities is 1.2 current liabilities, and then you have 5. This is 5 million. And then extract. So 5 million divided by 1.2 to get your current liabilities. So your current liabilities here is 4,166,667. And then we are going to substitute that to the quick ratio, but although the quick ratio is already 1, so we automatically know how much is our current asset. But for solution purposes, so diba, the quick ratio is equivalent to your quick assets over your current liabilities. And the quick ratio is 1, so is to 1. Therefore, we're going to look for your quick assets. So the current liability is already solved for 166,667. So therefore, our quick assets here would be the same amount, 4,166,667. Okay? Remember that the quick assets only includes the most liquid of the current assets. So we have cash, you have um, marketable securities, accounts receivable, and what will be excluded would be your inventories or the prepaid expenses. So assuming there's no prepaid expenses because it's not also given in the problem. So therefore, if we deduct your quick assets from the current asset, that would be our inventory. Okay, so therefore your current assets minus quick assets, so that's 5 million minus 4,166,667, you will get 833,333, and that would be our inventory. Okay, so your answers are correct. Very good. Next question. So next question is for Y3K. So that's actually question number um, 15. Okay, so I answered a question from the debt and equity. Do you have answers for this one? Okay, you try to solve this first. How much would be the net income? Okay, so ROE is given. Debt to equity is also given, total assets and sales. So what is our net income? So in your ROE, can you derive the net income in your ROE formula? So the ROE formula is net income over average equity. Okay, net income. So the question is the net income. So your ROE is given. So this is 16%. The net income would be computed pa. So average equity. So you need to know how much is our average equity. Okay. So how to get the average equity? So we have the given here sales, and we have your total assets, and then you have your debt to equity ratio of 1.2. So how do we read this one? This ratio, this means 1.2 is 1. Therefore, your debt is 1.2 and your equity is 1. So for every peso of equity, you have 1.2 or 1 pesos and 20 centavos of debt. So if we have our total assets, if you can recall the accounting equation, so that's asset equals liabilities plus owner's equity. So therefore, if you're going to sum up this as liability and equity, you will get your total assets. So given man si total assets, so therefore that's 1,580 equals. We have the ratio here for the debt to equity. So therefore, we need to determine the equity portion. So we will use X, or let us use X a substitute for your equity. And remember that your debt is 1.2 times your equity. So therefore, that's 1.2 x plus x. So that would become 1,580. Okay, apply your knowledge in algebra. So 1.2x plus x, that's 2.2x, wherein x is your equity. So extract your x would be 1,580 divided by 2.2. So that would be how much? 718. 718.18. Okay, 718.18. So therefore, our equity here is 718.18. So 16% equals net income over 718.18. Okay, so multiply by 16%. Your net income would be 114.91. Okay, so that is correct. Okay, very good. So the net income for the year is 114.91. So if you can also use the expanded formula for the ROE, but since we can just use this shortcut nga way, so kaniya itong gamiton to get your equity and to get your net income.
If you like this video, don't forget to click like, subscribe, and hit the notification bell to be updated with the latest video lessons. Thank you for watching.